Right. Sharon, thank you so much for being here with me today. We really appreciate it. Hopefully, I know it's going to be great, this conversation, and a lot of people are going to get a lot of value out of it. So thank you for taking the time.
Thing. Anytime I get to talk with somebody else who loves the solo 401k self-directed IRA space, count me in.
Excellent. Yeah. Well, and likewise with what you love to do, and you can enlighten all of us as we go through this, but the private money lending space is one of our clients and even myself, one of our most common ways of investing. So looking forward to getting into it. But before we get into that part of it, could you just give us like a short version of your background, kind of how'd you get started and what you do?
So, well, I'm in education, and in my 20s, I intentionally chose that career. I could tell it was one that fulfilled me deeply and still does. But as most educators know, what it doesn't do is provide financial freedom in the future. So, high reward, but not necessarily high finances. And so, it was in my 20s that I made peace with that. And as a result, started researching. At that point, I obviously didn't have a lot of money, but I had time because I was young. And so I researched and researched and researched. Finally, when I was in my 30s, I was able to make my first purchase. I purchased a condo. I did what I was taught. I waited for it to appreciate. I refinanced, pulled money out. I bought a single family home. Yay, it's working. I waited for that to appreciate. I refinanced, took money out, bought a vacation rental. It's working. And here's where it stopped. I tried to do the same thing. And then, of course, traditional lending institutions weren't able to approve me because my W 2 salary wasn't able to uphold that. And so it was that moment that I started researching, okay, wait, I'm not ready to throw the towel in on this. How can I continue this adventure? And that's how I ended up landing on the two things that I do today, which is creative financing and private money lending. Which, to your point earlier, I personally think, we're drawn to real estate. We're told it's passive income. I have not found real estate to be passive, but private money lending is the closest to passive, in my opinion.
Indeed. Indeed.
Yeah.
Yeah, and private money lending and real estate obviously have two different places in the investing kind of journey for people, right? One has tremendous tax benefits potentially, and one not as much. One kicks off earned income, one kicks off Schedule E income. So there's a difference when it's not in a retirement account. And so just generally speaking, and I'm curious to hear your thoughts on this, when clients are talking to me about what they might invest in, and in my world, it's obviously it's IRAs and 401ks, not usually their personal money, but I'll insert my opinion wherever they ask me to. And so I generally say, hey, if I had to choose, do PML, private money lending, in your retirement account because it's earned income outside and it's not in the retirement account, and invest in real estate outside your retirement account. Obviously, there could be a place for both in either. And real estate is great because you get this underlying asset appreciation and rental income coming in at the same time, but the numbers have to make sense. If it's not cash flowing, it's not putting money in your pocket every month. I don't really care what the tax benefits are. It's not an asset. That's how Robert Kiyosaki, defines asset versus liability. And I think it holds true in a lot of ways. And plus, the tax benefits are kind of a gamble anyway. Like, could they work? Yeah, they do work, but you don't really know what your future W-2 income is necessarily going to look like and how much of that's going to offset and what the carryover is going to look like. But whatever, I digress. You got me going, but
I
thank
like
you
it.
for sharing that. That's
Yeah.
super cool. Yeah. I love what you did though. Like, you went from kind of tried to step up into bigger and better pieces of real estate, right? Obviously going from buy and hold to SFR, or excuse me, to short-term rental STR is kind of a different model, but it's still a great thing to explore. And obviously the STR should be putting more money in your pocket each month, each year. And
Keyword should. Keyword should.
yeah, exactly.
I mean, that's why I like that's why I like private money lending. The bottom line is, I have found that to be the most predictable and reliable. And maybe it's not as much, right? So sometimes people get googly eyed by the potential gains they can have somewhere else. But to me, in my place where I'm at with my own personal investment, reliable income is a really nice partner to talking about IRAs. If my entire nest egg is all in stocks and equities, that feels to me very vulnerable. Whereas this offsets it because it's income that I can predict and count on. That's a comforting thing, given the uncertainty of the world, of the market, et cetera.
Yeah, no, that's a really good point. And it seems like borrowers, obviously you're making good decisions on who you loan money to, but it seems like logically speaking, borrowers are more likely to pay the mortgage, just generally speaking, than a tenant is likely to always pay the rent. Is that fair to say?
I think that's very fair to say because if you're a borrower and you're engaged in a partnership with a private money lender, which I don't know where you are, I also play that role. I'm both a borrower and I'm a private money lender through my self-directed IRA. We're speaking the same language. We understand each other. If you're a person who has taken the effort to research what does it mean to have a solo 401k or a self-directed IRA, then to act on it. Now you're already a smaller percentage because you've not just researched, you've actually acted on it. And then, I don't know if you see this, but I end up talking to people who have the self-directed IRAs and the solo 401ks, and the money just sits there because deciding what to do with it is also an intimidating and hard decision to make. So those three things make you a person who is we're speaking the same language, right? There's a level of understanding, of respect, of responsibility between a borrower and a private money lender versus a tenant and a landlord, which is,
Yes.
I think, what you were headed towards. Yeah.
Yeah, definitely. Thanks for sharing that. Do you still have those properties, by the way,
I do
that you want?
not.
No. Okay. All right.
And sometimes I'm very proud of that decision. Sometimes I'm
Sure.
not, but that's such is life. COVID kind of freaked me out. It was the first time that I was like, wait a minute, is real estate going to work? The way I thought it would. And I just my fear made me feel like, let's just keep my assets close where I can control them. So it's okay. I mean, we make our decisions and there's no real wrong decision. There's good and less good ones. And it's a little bit of what got me to where I am right now because after some years went on, I realized actually real estate, I do love real estate. That's something that I love to do. I also love being in the stock market. I'm not one or the other. That's not my style. I love both and I think both have different benefits. And it got me really deeper into the creative financing and deeper into the private money lending. So what I currently do, I'm in education, so having an impact, a positive impact to me is important. Obviously in my education world, but in this world too. And so one of my kind of value systems that I always kind of check when I'm checking the criteria of investments and relationships is this a win-win-win? And so the whole thing I'm doing right now has three different categories of wins. The first one is the private money lender. What are the terms that I provide? And let's make sure the private money lender wins. The second one is me. And I really just want to be real about that. I am the operator. There's a win in it for me as well. The third one is the buyer that when I get these properties, I then turn around and sell it as is using owner finance. Did the buyer get a win out of this? If the answer is yes for all three of those things, that is something that I'd like to move forward with. So, and I'm happy to share more about the investments or I'm happy to share more about the private money lenders, but that's kind of how I categorize the how I decide to make sure that it's kind of like three legs of the stool are all winning in this.
Well, okay, so let's go down that path a little bit because people may not think that, or they may think you're doing private money loans the traditional way, loaning money to fix and flippers for 6 months or so, and then getting paid back. And then you're doing that again to the next investor or that same person again when they get another property under contract or whatever the case may be. But that's not necessarily your model. So maybe you can share with us because you kind of hinted at it a little bit there. Maybe you can share a
What are the
sample
things
with.
are, yeah. Yeah, it's not, and that's okay. I think the other strategy is great for many people, and they can be coupled with what I offer as well. There's everybody's got different investor DNAs and different moments in their life where these work. So yeah, the first one is private money lender, the second one is me as an operator, the third one is the buyer. So I'll talk about the second one first because it informs both the first and the third. So what we do is we buy distressed properties specifically in the Midwest. They fit our criteria. We find them to be 30,000 or below. These distressed properties are livable. That means that all the mechanicals are working. That means that somebody could live in it right away. We then turn it around and sell it using owner financing to people who want to buy it. Who are those people? They usually tend to be three buckets of people. One is individuals or families that want to turn this into their forever home, but they can't get approved through the traditional lending institutions. So we become their sources of financing as well. Two is people who've got the skills. It could be a roofer, a plumber, a general contractor. Somebody's got the skills. They want to take this, fix it, and turn it into their forever home. And three is other investors, investors who also can't get approved by traditional lending institutions and are able to get in there in a more accessible way. That's the three kind of buckets of people that I find that we usually sell it to. No matter how much money you can have 300,000, you can have 300 million. At one point, to get this to be scalable, you can't keep using your own funding. And that's where that other win comes in, which is the private money lender. So these are partnerships that we create. Mine have been with people who have self-directed IRAs or solo 401ks because there is such a benefit to the compounding that you can do here. And we offer these lenders 12%, and it's amortized over 5 years. So it's not that there's the balloon payment, a fix and flip. This is amortized over 5 years. Every single month it goes. You have built into the interest and the principal. And meanwhile, the property is gaining equity as a result. I try with almost every one of my transactions with private money lenders to give them an already built in anywhere from 10 to 30% equity from day one. So there's that as well. Did that explain that? I'm happy to answer more questions, but
No, it's a fascinating model. I'm sure people that are listening to this will have more questions, and I probably do too. But we want to learn more about you as well beyond just the sample model of the investment. Although it's fascinating. I love the way that you do that, and I like how you explained it as a win-win-win because it is, and an owner who wouldn't otherwise be able to buy is getting the financing needed, and you're carrying the paper, which is
yeah.
kind of your goal anyway. And then you also got a property initially, and so it's like a trifecta of
Yeah.
things happening there. So yeah, really, really cool. Thank you for kind of delving into that. And something that I urge people to consider, if you put, now we're talking about smaller dollar amounts here, Midwest properties under $30,000, but that's fine. Add a zero. It doesn't really matter. Add 6 zeros. The principle still applies. If you put $30,000 into a property, what's that really going to rent for? Maybe a few $100 a month, give or take. And that's okay. It's not terrible, but you still have the holding costs involved if you keep that property, if you hold it, if you're the investor of the property. Whereas with the paper, you don't have any holding costs, right? I'm sure. Is that a factor in why you kind of went down this path? Is that your income is just what the income is? There's nothing really coming off the top of it, like a principal, interest, taxes, insurance each month or each quarter, each year, whatever. Is that part of why you decided to go this route as well?
It is. I don't know how many people follow this trajectory, but for me, the whole toilets, the turnover, the roof that then takes away all the profit, that started once I got to see the whole picture of what it meant for me, that stopped working. And one of the reasons was because I sold those properties and I got older. And so now when I'm older, I have to look at things a little bit differently. I don't want to paint a picture that's all rosy. There are things that the things in for me as an operator, which doesn't impact the lender, is if they default on their payment, right? I'm suddenly playing the role of the bank. If they default on their payment, I need to make sure I have chosen states that allow me to foreclose as fast as possible.
Mhm.
And that is why you'll see that the states we're in right now are Missouri, Michigan, states that are specifically landlord friendly. And the reason we say landlord is what we do is we build into our contract, if there is a default, they turn into kind of a tenant status, and then we're able to go into an eviction. I don't need to go into too many details in there. The point being, everything's got its work, right? Everything
Yeah.
for me, except for passive money, private money lending, but everything has its not dark side, but you know, there's a taxation, pluses and minuses. Thank you. I was looking for the right word. And so I do want to be real about that.
Is
I
that oh, go ahead. I'm sorry.
I've been pretty lucky in that every time I've had to switch out a buyer, it has not been dramatic. It has not needed to go to court. I haven't had to do any of that, but I'm prepared for it because I like to know, what am I getting in? What is going to be my hardest day in this journey? It's going to be that. And at least I look it straight in the eye.
So are they all trust deed states?
I don't know.
Trustee versus judicial, right? As far as foreclosure goes, one goes through the courts, one the trustee can just foreclose on, but you haven't had to go down that path.
I haven't had to go down that path.
That's fast. Yeah, that's great. And what a great problem to have, to not have to go down that
I
path.
know. I know.
What about is that like a deed in lieu foreclosure kind of thing you're talking about, where they're just like basically you're taking the property back,
Yes.
you evict, and you just put a new, it's not a new, I want to say new tenant,
A
but
tenant,
it's not a new tenant, it's a new buyer.
the new buyer. We tend to call them tenant buyers, but it's the same thing. It's a new buyer. It's not a tenant. Yeah. And I've been pretty lucky. I just had one the other weekend where I just finished the quitclaim deed. It was recorded, and then it happened to be a weekend, and that weekend I filled it already. So it didn't even, again, the private money lender had no idea. I let them know at the end of the month. I kind of give reports on the status, but literally it was a couple days of not having an actual buyer in place. So it was pretty nice.
So in your past, you went from condo to single family home to Airbnb. There was presumably, I'm stepping out on the limb here, but presumably there was an upward progression of investment going on there. Are you applying something similar to this? Where do you go from here? Or do you just keep rinse and repeating the same thing into perpetuity?
That's interesting. I think this is a rinse and repeat because I am where I am in life. I'm thinking about, am I leaving this for my kids?
Okay.
And so I'm like documenting everything that you need to do. For me, right now, I'm still managing it myself. The trajectory I see is getting a virtual assistant to do all the admin or automating it as much as I can. Things like payments to private money lenders are automated, but there are other things that need to happen to operate the actual portfolio.
Mhm.
Um, but once you have, so you were talking earlier about the tenant buyer. I have a 5-year commitment and relationship with my private money lender. I have a 30-year note with the buyer. So for the first 5 years, they're helping each other, right? The payments from the tenant buyer pays for my payment for the private money lender. Then there's 25 years, and then at the end of the 25 years, the deed is theirs. They are the official owners. So it's not like one properly will be there forever. So this is, when I was younger, to me, it was important to have the property forevermore. Today, I like the cash flow for me personally, where I'm at in my personal.
Sure. Yeah, makes perfect sense.
And there's something you said. Oh, I'm sorry. Did you say
No, no, go ahead.
there's something you said earlier about the private the lenders? I will say this. I think you said it doesn't matter if you have 30 or 300, add as many zeros. I think the kind of relationship that I tend to get into, I just had one the other day. She became my lender for one property. We refinanced an existing. And then I had another one that really fit the criteria that was really good. And I just asked her, hey, would you like to do another one? And again, this is in her self-directed IRA. The money's just sitting there. So she was like, yeah. And within 7 days, we closed. And here she is on her second loan with me. I think the power, and I sit with people and show them the visual of this, but the power is the compounding. The 12% over 5 years is lovely. It's great. But if you have time and you are okay redeploying versus seeing your account grow, anytime you hit 30,000, you automatically redeploy. You give me a call, hey, do you have any more properties? And then you redeploy. And that's when the compounding starts. And if you redeploy every time you get 30,000 in a 5-year span, the income that you have made from the payments that I make as the borrower has doubled. So if you start with 120,000, for example, that's 4 properties. By the time 5 years rolls around, your income is well over 240. I think it's closer to 280 or 90. So it's up to you when you want to stop redeploying. Your cycle is 5 years. Once you're ready to, you get close to retirement age, you want, and again, that's your choice. You may actually want income. So keep redeploying because you're just getting income from it. Or you may want to see your account balance grow. Okay, so then stop redeploying once you get to 30,000, let the 5-year loan cycle out, and then your account balance grows again. Detailed discussions, and each person is different, but I just wanted to throw that out.
No, yeah, and that's the beauty of investing. It's at least in the my world, it's self-directed, and it's called that for a reason, right? They get to choose what they do and how often they do it within, the financial capacity they have, obviously. But yeah, no, thank you for outlining that. That's great to think about because a lot of people don't think about the redeployment, and there is a factor there, right? You want to redeploy, you want the money working for you, but nobody ever said this is a either or thing, right? And what I mean by that is it's not like you have to wait until you have $30,000 built up in the account before you invest any of that money, right? The smaller amount can still be doing something for you in between private money loans. For example, me, I put it in, I usually just throw it in the S&P, though there's argument that that's maybe a little too volatile for some people. I'm okay with it, I think, for the most part. So you could be more conservative with that. But that's okay. Once it builds up to whatever it is you need, 30K or whatever, you can go back to an alternative asset like a private money loan. So I don't want people to think that the money just has to sit there earning zero in between it building up enough to do another PML. And so that's something that actually people ask me often about, like, what do I do in between? That's usually my answer, something like that.
It becomes kind of an addiction. Like, what? It's just sitting there. I can't just sit there.
It does. I know.
But yeah, I love the self-directed as well. And if you're comfortable with the market, you can also build in protection. You can hedge, and so just in case if it feels too volatile, you can have something in there that protects you as well. It does cost some money, but that's a
Yeah,
whole other topic. But
there is.
is that it? You don't have to. I will say, by the way, if you are doing that 5-year cycle where you keep redeploying, the more you do that, the quicker you get to the 30,000, right? If you started with 4 properties, that's going to take about a year. Once you're at 8 properties, it takes just a couple months,
That's
5
right.
months.
That's right.
That's going to cycle faster the more you have.
Yeah, that's a really good point. It's going to speed up for sure. Okay, what would you tell someone who's kind of thinking about doing this and maybe they haven't? If you could go back, you'd tell your younger self, or however you want to answer that question, maybe early on in their investing journey before they go too far down the rabbit hole.
Let's not talk about what I would say to my younger self. I don't know if everybody's like, oh, if only you remember that saying, the youth is wasted, or youth is wasted on the young. I'm finally at the point where I was like, yeah, it is wasted.
It sure is, man. All the energy and none of the wisdom.
I can't even. I would say if somebody's exploring this, so one thing, as I mentioned, I'm in education. The two things I do is this, right? Operate this whole portfolio and talk to private money lenders and turn around and sell it. But I also educate. I can't not be an educator. So as I started understanding that there are people who have created the self-directed IRAs, which takes some investment and time and devotion and vision, and then the funds just sit there. When I started learning that, I started understanding that there is a fear, even though you get that private money lending is the most passive, and yay, that's what we're looking for. But there is some anxiety around that. And I understand that. So I just like to educate people, like, here's the paperwork you need. Here's what's going to keep you safe. Here's how to, like, what's your investor DNA and who is this person that is going to be your borrower? How do you make sure that they match for you? I'm a match for some people. I'm not a match for all people. So I would say get educated. And I would also say find people who are doing it and talk to them and see what it took for them to get comfortable with it. Just kind of start to have these conversations. They're fascinating. I find this whole world, I used to be, I don't know if listeners can relate to this, but when I chose the path of education, where I was, the topic of money was like a bad topic. I was like, they couldn't be more opposed. And yet I was interested in both. And I'm starting to see that these conversations, like, there is a personal psychology that comes into it. What is your psychology around money? What is your psychology around how it fits with who you are or your current career or the impact you're having on the world, etc. I personally like to get in those conversations. If you're going to be my lender, some lenders, like this one lender I was speaking about, she just doesn't need to have a relationship with me. It's very transactional. Here you go. Thank you so much. That's fine too. Some want to really talk to me about my personal journey, how I got here, that kind of thing. And I love both. To me, that's really fun. And it speaks to so many parts of who I am. And it brings in the money part as well. So to bring that down to the nugget of what you asked, get in conversation, um, honor what you're feeling. If something in there does not feel safe, this is not for you. Or keep having conversations until it does feel safe. But just be true to yourself. I call that, I didn't make this up. I learned it. There's an investor DNA. Who knew when I got into this that didn't exist, but everybody has their own DNA, what they're more comfortable with. And learning more about yourself will inform how and when and what your investment strategy is going to look like.
Yeah, that's good. Part of it is risk tolerance, right?
Right.
And the other part of it is potentially, like you said, trust your gut. That's how I would say it.
Yeah.
What I've learned, Sharon, is my wife and I, we're not the same person, obviously,
Right.
but we're
You
also
don't say.
yeah, right. I know, but we also have two different mentalities when it comes to risk tolerance, and also I'm the natural spender and she's the natural saver. So her mind always goes to um, is this a good idea? And what are the downsides? And my mind is this boyish optimism that it's always going to work out and we're going to make $1 million. And, I'm going to sell 50 houses a year as a real estate agent and I'm going to make $1 million in commission every year and it's going to be rosy and beautiful. And she's more of a realist. And so we complement each other from that standpoint. So for me, it's like, okay, here's what I'm looking at. Her name's Mary. Here's what I'm looking at. And what do you think? And I've learned if I just force it, whether she wants to do it or not, if she doesn't want to do it, it doesn't usually work out well. Her gut is just on point. And so that's my gut. I kind of like transition over to
Okay.
her. So, but, uh, but yeah, trust your gut, bounce it off a partner, talk to Sharon. She's more than willing to have a conversation with you if you are wondering if something's a good idea. Maybe someone is, you're having some red flags kind of come up. By the way, if you have to ask that question, it's probably somebody you shouldn't do business with, by the way, just as a general rule, not 100%, but 99.9. So yeah, anyway. All right. Any good books you could recommend? Any resources to point people to?
I'm a listener these days. I don't remember.
Or
Books. I
podcasts?
like podcasts. Nothing comes to mind right now. The last book I had, where was it? Let me see. I can't remember where it is now, but no, I don't have one right now. Not that comes out to mind. Sorry.
It's okay. Yeah. Have you heard of Jimmy Napier before?
No.
He wrote a book. It's probably from like the 70s, but I'm drawing a blank on the name. I have it. It was hard to find, by the way. That's how it wasn't like in mass
Okay,
production, but
yes.
it was all about investing in doing private money loans, basically. But this is like 40 plus years ago, 50 years ago. So it was not in vogue like it kind of is today. Anyway, he teaches you how to use a calculator to calculate your actual return. And it's a really fascinating book. So anybody who's considering investing or doing private money loans, I highly recommend that. And the name is going to come to me. Invest in Debt. It's called
I was
Invest in
just gonna
Debt.
say that I have that one. It's red and it's not
Yes,
easy
it
to
is red.
find on Amazon. That's funny. I was like, not invested debt. That's not just to me, that's private money lending. It's also the creative financings. That's
Correct.
both of those, which is where I like to spend my time in both of those
Yeah.
arenas.
Right. Well, if you're open to it, how can people get in touch with you if they either want to become a partner or I don't want to bombard you with like, hey, mentor me, please, Sharon, but whatever it is you want to share,
Yeah.
how can they get a hold of you?
I'm happy to have conversations. Also, I do the private money lender courses, so just talk to me and we'll see if that's a good fit for you. I'll give you a QR code if you have notes for this episode. I don't know where that'll go, and that QR code will just bring you to a form. Put in it's very minimal questions. I think it's 3 to 5 questions. No, not a big time waster on your part. I'll get it. It'll automatically give you a link to the Calendly, and you can get on my calendar. And we can start with that, and we'll take it from there.
Sounds good. All right. Thank you so much. We really appreciate it.
Thank you, Brett. Always fun talking to you.
Absolutely.